Good morning, good morning, good morning, everybody. It is December 2, almost 6 a.m., and futures are dead flat. Dead flat on the futures as we're heading into the jobs report today at 8:30 in the morning. After 8:30, I will throw out some of the trade ideas that I've got set up for today. But prior to that, definitely not going to throw anything out there that somebody might actually jump on and miss the jobs report and then not be able to see any changes. Because yesterday, again, crazy trade, boom, boom, got a little bit of money on that. If you scalped out on it, the risk trade, bang, 100%, like I posted there prior to the open. Put a gun to my head. We closed below 40.80 yesterday. We wound up closing at 40.76.57. Boring day, very boring day. I actually fell asleep in my chair. Boring day. And the safe trade, again, safe, safe, safe. Got a little bit better than 40 there at the open. As you see, when we get that open going, I am always throwing out what the trades are. Boom, boom, boom. You had 40 cents was what was out there. I think it did jump to 50, 55 as we got up there to that 4100 print. But again, you know, risk trade 40.85, 40.80, 138% after that open, 290. So yeah, today we have the jobs report, right? And we've had hits, we've had beats, we've had this, we've had that, but again, it all comes into where are we right now. So just going to go over the prior jobs reports, but understanding we were in different places at different times when these jobs reports came out. So the reactions that we had from the jobs reports are obviously relevant to where we were in the charts. November 4th, jobs report came out, bang. Big gap up, came back down, went red for a little while, and then bam, up, closed up plus 1.36%. October, again, the October lows came the week after this, and we were already on a very steady decline to the downside as we were heading into. We closed below, we closed right at the June lows, 36.39, but we were down 2.8% on the day, big gap down, never even had a chance to head to the upside after that jobs report in October. September, again, very similar. Where we were in the periodic table for where we were with our charts, you had a big gap up, bam, stayed green for a little while. Then right around noon was when 𝐂𝐀𝐋𝐋, if I recall, came out and said, "You guys you guys are going crazy if you think that we're going to stop raising rates." And then bam, we went down to the downside, closed down 1%. And then here was August. Again, August, we were heading into the August highs, if you remember, because that's what we keep talking about in the charts, the August highs, the August highs. And we had a big gap down, came back up there, almost went green on the session, failed, went back up, failed, went back up at the end of the day, and failed again. And you can see over here, looking at the Dow, looking at the NASDAQ, the Dow was strong. Dow went green on the day. NASDAQ is still your weak point, and the NASDAQ continues to be the weak point where we are right now. But from where I'm at, from where I'm sitting, we should be looking and expecting downside movement prior to any kind of real upside movement like we got the other day, which again we were already headed into. And today is the last day that FOMC speakers are legally allowed to speak in public. So today we got a few Fed speakers later in the morning. They are not allowed to speak next week, and then we've got the FOMC meeting the week after that. So here, what I'm showing you here is the dollar. This is the DXY. And the DXY yesterday came right down to that 104,636, which is the August lows. Very pivotal point to where we are right here, basically a neckline. And again, below the 200-day moving average, blew through that 50-day moving average. And if you remember going back a couple of weeks ago, I kept talking about this 113,442 being the resistance level and a reason why we should be getting long on SPY, QQQ, and other things. Now, again, we're getting a big warning here that's starting to say, you need to be out of your longs and you need to be expecting a move to the downside. That's what this dollar chart is telling me. Come over here and we're looking at the 10-year. This is the 10-year bond, the TNX. And again, pretty aggressive move down to 3.5%. 100-day moving average right there underneath it. You got a couple of pivotal areas above to be considering along with the 50-day moving average. But you got a gap over here to be filled from last week, and we've got a gap over here from back 2 weeks ago to be filled. So considerable. Not as strong as gaps that we have on SPY and SPX, but considerable something to be thinking and respecting that these dollar and the 10-year should get a move to the upside, which would again trigger for SPY and SPX and others to be heading to the downside. Here again with the VIX. VIX is blowing that alarm off saying we're down below 2102, guys. You're buying time right now that you're playing with this look to the upside, buy calls, buy calls. You're due to get a move here on the VIX, which again, I would be planning for a move to at least 2371, but we'll see whether or not we do get a move that's stronger up here into the 25-27 region to touch all these 100, 250-day moving averages. But again, this is where I come to and just trying to really summarize everything. We had the big CPI move up, and then we went and chopped around and held that 100-day moving average when we had that tag there back in the middle of November. Now we've had this big move up that we just had last week, and we are looking here at the Russian invasion lows from back in February when Russia invaded Ukraine. And you've got this white line coming down here on top. Now, again, I've always told everybody I'm not a trend line guy, but I do draw my trend lines to the penny and to the minute. The actual minute that those pivots were put in place is where I draw my lines. And I've always had success with my trend lines because of that. But using that in terms, trend lines are only good when you're using them on the right time frame. So this big star here is what I'm looking for. A drop down to somewhere between 400 and 395. Anything below 395, I'm 100% expecting that the 100-day moving average holds it down here at 391. But I am expecting a move to the downside. Now, for the upside, for all those that want to consider it, this is the 1-minute chart, and this is as accurate as you're ever going to get. We still have that gap here to be filled right above the Russian invasion 410.16. And then you come to that all-time high March high resistance line, which is pegging out right around 411.25 and heading down. So that's going to continue to move down a couple of pennies every single day. But that's where we're at. And as you can see here, we're pretty well resisting that 15% from the all-time highs line right at 408. So again, I would not have any enormously medium-sized pocket change exposure to the upside, but rather be using a little bit of that shoebox money to be putting myself into some downside movement. And if we get a jobs report that actually triggers it this morning prior to the open, then we all know that what I was talking about yesterday with those December 9 SPY 404 and the December 9 400 puts, it all going to work out. So have a great morning, everybody, and I will see you in the chat room.